FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and the date is November 4th, 2015. Earnings season. Well, just about every company of the 500 major ones that reported lower earnings. Most of them reported lower sales. Not the sign of a healthy economy, but there's so much more to discuss. And you wanted him. We got him back. Andrew Hoffman. Sorry about last week, Andy, but I was traveling up to Buffalo, New York, then down to New Orleans, and just couldn't fit it in.
Mm-hmm. You couldn't find 2 more disparate cities if you tried.
Yeah, well, Buffalo is booming, though. That's the amazing thing. You're a New Yorker. You know that Buffalo was perceived as a less than desirable city in New York State, even though it's the second largest city in the state by population. It's been on a decline since the 50s. For the first time ever, the government is pumping in a bunch of malinvestment dollars that are having, at least in the present time, a very salutary effect on the city. Tons of building going on, people moving in there. And another thing is the millennials, they don't drive cars. So they are drawn to urban settings, places with shopping within walking distance. Often you can walk to your workplace, or you're working out of your house, and mass transit. And this trend is definitely having a positive effect, plus really cheap real estate prices. So
yeah, except what jobs are they doing up there?
Well,
there's a reason why real estate prices are cheap.
But I'm telling you that I think they've turned a corner.
Okay, great.
How long it will last, I'm not one to say, because from an Austrian economic standpoint, malinvestment is taking place there, but there's a lot of private investment. It's kind of like a Detroit scenario, except they're 10 years ahead of where Detroit finds itself now.
All right. Well, look, all I know is when I went to Albany, I took several trips there, and they have great college bars. But let's move on to the next topic.
And the next topic,
earnings. That's what we're talking about, right?
Earnings,
so the last time that the S&P 500 traded at this kind of earnings multiple, and back then, earnings were far less manipulated from both an accounting standpoint. Of course, all the stock buybacks that have gone into, increasing earnings per share now versus then, so they're much lower quality earnings on many fronts than they were back then, was the end of 2007, right at the top of the stock market bubble, which crashed in historic form in 2008. Of course, back in 2007, when the earnings multiple was that high, we were at, of course it was all artificial, but we were at a, quote, booming economy. Debt was far less. We hadn't had the financial crisis yet. There was optimism everywhere. So now we have the worst, we have complete pessimism of as I say, the worst global economy of our lifetimes, massive debts, collapsing currencies, commodities, and yet the earnings multiple on the S&P 500, with earnings down 8% year over year and expected to fall again next year, is at the same historically high level. That's what a bubble is. That's why in yesterday's Speechless article, I wrote of how what's going on, particularly in this last month, the best month for stocks in 4 years, when absolutely positively nothing positive has happened. And, you could certainly say, well, now because of that horrible NFP employment report on October 2nd, the Fed's not going to raise rates, and that's why stocks surged. Yeah, but how come stocks have been surging in the past week since the Fed met again and they created this whole new pretense? Oh, we may open the door for rate hike in December. It's called massive, massive manipulation of stocks, gold and silver. We've spent 2.5 weeks of every day them protecting the 200-day moving averages of 1175, I think it was, and 1595 for silver, just relentlessly blocking them from going through until finally they could smash them down, as they're doing right now. And at the same time, goosing the stock market. We even saw oil in the last 2 or 3 days surge higher on absolutely nothing yesterday. Yet another big build in inventories. There's nothing going on in the oil market except for increasing supply and falling demand. So again, we're going to crash back to earth as always. And as I wrote, in that Speechless article, I was talking about what I wrote last week. I wrote something called "How's Economic Mother Nature Doing?" Because people are getting frustrated, like in precious metals land. They're worried, well, gold and silver are not going up. Maybe the powers that be are winning the war. But if you look at, when I first wrote about economic Mother Nature a year and a half ago, I compared where everything is since then. And the Dow's up. It was a year and a half ago. The Dow's up 6%, but everything else is plunged. Commodities, oil prices, currencies, economic data of all kinds. Gold and silver are barely down. Gold's down about 10% over that time. The only thing that's really been smashed since that time has been mining shares, which are down like 40 or 50%. So again, if you own the real thing, and particularly silver, where the premiums have gone up over that time because of shortages, it's really just been a frustration more than anything. But the fact is, they've maintained last to go markets like the Dow Jones propaganda average. But for the, underlying it, everything is falling apart. Look at today. The euro is about to hit a 12-year low today. Draghi came out yesterday and said, yeah, we really do need to print more money. Last week, the Chinese did an emergency rate cut. This week, the Australians said that they're getting ready to do it. Sweden increased their QE program. And of course, we're still playing games over here, pretending that maybe someday we'll raise our interest rates here. Meanwhile, the debt ceiling, they just temporarily suspended it again. So guess what? Just yesterday, the debt went up by $340 billion, which on an annualized basis is something like $800 billion. But the government, whose fiscal year ends September 30th, so that they were able to report their deficit, while before they had raised the debt ceiling, said, oh, we only had a $450 billion deficit, except the debt went up by $800 billion. It's absolutely insane what's going on, and it's only going to get worse with each passing day.
Yeah, there's definitely something wrong with this picture. All is not well in the market for sure, and eventually things have to catch up to reality, don't they?
And they have around the world. Again, when I put that article out probably a year ago called Last to Go, and I'm trying to say that the most important markets in the world for these guys are, one, the Dow Jones propaganda average, and two, paper gold and silver, because they can't prevent physical gold and silver from seeing record demand, which they're going to see this year, or supply from falling. But they keep the prices down of gold and of paper gold and silver, and the stock up. And to a lesser extent, you have the Nikkei, which we now learned this week that the Bank of Japan owns 52% of all the equity ETFs, and now they want to buy individual stocks, because it's pretty hard to keep the stock market moving up by simply buying the ETFs. You actually have to buy stocks at some point, or the ETFs break, like the double Nikkei broke last week. They no longer are taking orders because the Bank of Japan. And, so with the exception of that, stock markets around the world have been in bear markets. The average currency is sitting at or near its all-time low as we speak. The average commodity is sitting near a multi-decade low as we speak. Earnings are falling. I mean, you have catastrophic, geopolitical issues and social unrest around the world. It's not getting any better. And because they got the stock market to go up for a month and protected the paper gold and silver at their 200-day moving averages, isn't going to change a thing.
No, how can it? I mean, when the fundamentals aren't good, how are you going to make the fundamentals good?
Yeah, as I said, the title of today's article I just wrote is called "They're Only Making It Worse." For instance, with the mining industry, every major miner, with the exception of Newmont, which barely made a profit, has reported a loss for the third quarter thus far. And there's still several to go. And typically the ones that wait the longest are the ones that have the worst news. And I saw Anglo Gold delayed theirs a couple of weeks. And of course, Kinross is always one of the last, because they're probably the closest to bankruptcy. And so again, these companies, like the government reporting a $400 billion deficit when their debt goes up by $800 billion. And by the way, the new temporary debt ceiling is suggesting that they're going to go up by another $800+ billion a year for the next year and a half in debt. But it's the same thing with mining companies reporting losses, but saying our cash costs are way, way down and our all-in costs are down too. No, they're just lying. They're just accounting metrics that mean nothing. The mining industry is on the verge of collapse. And trust me, if the big companies are losing money, the small companies are hemorrhaging money. And, look, we're just 2 months away from year end. At year end, the miners are going to have to do their year-end adjustments to reserves based not just on lower prices, unless you have a major surge in the next 2 months, but the other factors that are involved. I mean, heck, Kinross has been reducing reserves for the past 2 years without even reducing their gold and silver price assumptions, because a lot of these assumptions are just accounting arbitrary numbers that are based on nothing. Believe me, I was in the mining industry for a long time. So you're going to see some catastrophic declines in production. And even Goldcorp just put out a graph that's confirming what I said all along. This was peak gold this year. It's all downhill from here. And, remember our Miles Franklin Silver All-Star webinar from about a year ago, where we said in silver, it could be far worse. I mean, far, far worse, like 50% declines in production over the next decade, because half of all the silver in the world comes from copper, zinc, and lead mines, which are the prices of them are collapsing, and they're going to keep collapsing because of the massive oversupply that's been built up in 15 years of financial deformation.
Oh yeah, you're so right, and it's just hey, what you said, economic mother nature compared to markets.
Yes, she always wins. And the thing is, again, around the world, almost every market has been falling. Certainly commodities, which, if you currencies. So, any asset that's priced into these foreign currencies is plunging, like the euro. I mean, if you're an American and you own the DAX, which again, how comical can it be? The DAX German index just has gone up from, I think, 9,600 to 11,000 in the past month, also on horrible economic data. Their export data is collapsing. Now you have the Volkswagen thing. You have them talking about anarchy because the refugee crisis over there. Everything's falling apart in Germany, and their index went up from 9,600 to 11,000 in 4 weeks. I mean, that just shows you that, economic mother nature could not care less if the euro is printing money and the ECB is printing money and buying the DAX index, buying Volkswagen for that matter, or Glencore or whatever. The fact is that the business that's underlying it, as I said last week, is the worst of our lifetimes and getting worse. And believe me, people forget, we have another NFP report on Friday. The Challenger job cut report, and they'll have another version of it, it'll come out tomorrow, is saying that 2015 will be the biggest year for job cuts since 2009, which was right at the end, right when people really, corporations were really focused on mitigating the damage from 2008. Well, that's what 2016 is going to be. The commodity crash occurred in 2015, and we had this horrible first Q GDP, third Q GDP. Now the fourth Q GDP is expected to be under 2%, and it's not real GDP, it's BS anyway. The third quarter GDP, the number one component was healthcare, and then we can go into Obamacare per the article I just wrote yesterday. But 2016 is going to be when the corporations really start laying off people because of the commodity price crash.
Mm-hmm. Oh, agreed. I mean, there's nothing good down the pike here, and whatever illusions of prosperity there are right now, they're only illusions, and that's what you have to really keep an eye on.
And for that matter, 2 days ago, and everyone's got to read this article, and for that matter, my 2 articles from 2012 and 13 on Obamacare, where I said back then it was the worst piece of legislation in American history. And the things that I said would happen are happening now. And I was catalyzed by getting my own notice in the mail of a 30% increase for lesser coverage. And 2016, remember, the mandate for employers was deferred 2 years ago till the end of this year for when they have to start, either firing people or giving them insurance. So that's next month when that deadline comes. And some already have fired people, but many more, like with the commodity crash, are going to do it next year. And for individuals, you're seeing not only exploding prices because of the inefficiency of Obamacare in general, a socialist regime in which only a handful of companies are mandated to do all the work and get all the profits. But now they are losing money. All the healthcare insurers are losing money. The exchanges, 10 state exchanges have collapsed with $1 billion of losses after being in business with quotes around it, for the past year. And a lot of it is due to corruption, but some of it is pure inefficiency. So again, 2016 is going to be the year where you really start to see the massive increases in the cost of the industry and the cost to the individuals, in the malpractice costs and the cost of becoming a doctor. So, I mean, that's why I wrote Obamacare, the nail in the head or the bolt in the head for the 2016 economy, among other things.
Mm-hmm. Yeah. So what do you do here? What's our choice, Andy?
Well, look, I mean, I'm in the financial realm. I mean, you can talk about all the millions of things you could do to protect against worst case scenarios. In financials, I do the same thing. For me, only things I'll own are my house that I plan to live in, physical gold and silver, and a little cash out of the banking system. I can't imagine. I mean, we're talking about the the biggest selling of U.S. Treasuries by foreigners ever at their most highly overvalued levels ever. We're talking about stocks at their to me, the most highly valued levels ever. I mean, yeah, there might have been some internet stocks back then, but they didn't have these unicorns like they do now. All these, these private equity ventured companies, which are waiting to collapse now. That didn't even exist back in 1999. So I think that the markets financially, forgetting the PPT, are as overvalued as they are in history. And, are they going to hyperinflate? Are they going to collapse? I don't know. But in time, you will lose your money in real terms. I don't know how much time, maybe this year, maybe next year. I don't know. But as for me, the only thing I want is real money. That's it. I won't touch anything else. Probably for my lifetime. That's how bad things have gotten.
Yeah. Well, I don't know about your lifetime. You got a ways to go here. I don't know about that, right. But certainly things are not good, and you need to be mindful of it, because if you're not, you know what's going to happen, right? Yes. What always happens, but except what always has happened hasn't happened in such a grand scale. I mean, there's never been a Ponzi scheme this big. There's never been manipulation this big. There's never been financial engineering and derivatives this big. There's never been a global market. There's never been a single currency not backed by anything. There's never been parabolic debt around the world, like we've seen now. So, I just say buckle up your seatbelts, because I see nothing but downside in economies and financial markets. And again, take a look. You talk about 2016, things that could absolutely crash between Obamacare and the impact of commodity prices. Just take a look at that dollar index, which is now surging back toward its highs. I think the high was about 100 or 101. Now it's up to 98 again. The globally, horrific impact of the surging dollar, which I predicted 2 years ago. I said the global economy is going to collapse, and with it, the dollar is going to surge because of its higher liquidity. There is nothing. It's what I wrote years ago. I said it's the single most precious metal bullish factor imaginable is the volatile currencies, but particularly the crash of currencies, which causes, currency wars and geopolitical tensions. And right now, for all the excitement about the 3,000 point surge in the Dow, you're seeing commodities, currencies around the world collapse, just like they did earlier this year. Yeah. And more good news on the horizon. Anyway, if you haven't done it already, go over to milesfranklin.com, subscribe to Andy's daily missive as well as his audio blogs, and come over to financialsurvivalnetwork.com and check our site out too. Andy, we will talk to you next week. Looking forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.